Can I take money out of my IRA right now if I need it? How much income can I take from my IRA if I contribute to it my whole life? How are my distributions taxed when I do need my money? These are all the most common questions we hear about taking income from your IRA. Now, an IRA can be a great investment vehicle, but be cautious of taking income before the proper date, or you could face immediate penalties and immediate taxes. Hi, welcome back to BrightWealth. My name is Scott McLaine. I'm your host, and I'll be your instructor for today's lesson. As always, we're here to accelerate your financial success. Okay, so stage 5 is all about taking income, and it's an important stage because there are penalties if you do it wrong. So be sure to pay attention here. One of the keys that's important about IRAs is that they're known as a qualified retirement vehicle. What that word qualified means is that when you put money into this type of a retirement vehicle, the money has to stay in there until you're at least 59 and a half years old. And so that's the first restriction that you really need to be aware of. If you open up an IRA and move money into it, you need to understand that that money needs to be there until you're 59 and a half. So if you're 20 and you're opening up an IRA, put that in your mind so you know that that particular bucket of money is going to be long term. And so you can use other buckets if you need access to that money along the way. Now there are some exceptions when you can access your money prior to 59 and a half, and we'll take a look at those in just a second. The second thing that you want to realize is that your money that goes into an IRA, well, first off, what I want to do is, what if you take your money out before you're 59 and a half? And I see people do this all the time. I want to kind of show you what's going to happen when you do that. So let me give you an example right here. Let's just say you've got some money in your IRA and you want to take $50,000 out, but you're only 40 years old. And let's just say you had, maybe $150,000 IRA balance, and you take $50,000 out. Well, right off the top, you're going to be subject to a 10% penalty. And so that's going to be $5,000 deducted immediately. And so you'll immediately turn your IRA into a $45,000 distribution from the $50,000. Secondly, what you'll do is you'll pay your current tax rate depending on the marginal tax system. And you can see the marginal tax system illustrated right here. What we have is for single filers and for married filing jointly. If you're single and you're taking money out of your IRA, here's the marginal tax system. If you're taking $50,000 out, then that's going to move up into this tax bracket right here, above 40 and below 86. So you're going to be in the 22% tax bracket on some of that money, the 12% on some of it, and 10%. Whatever your effective rate is, let's just say that's 18%. I hope that's not too complicated for you. But if it was 18%, and I probably shouldn't have used that number, let me go with a 20%. That'll be easier. Now you're looking at another 20% of the original $50,000 is going to be another $10,000 that's going to have to be paid in taxes. That's going to come out of the 45, and so that's going to leave you $35,000 left over. So you went to your $150,000 IRA. You wanted to take $50,000 out. You ended up only getting $35,000, but your IRA now only has a $100,000 balance. That's the problem with taking money out early. And I wanted to highlight that so that you're aware of that. Specifically, putting money in your IRA, one of the worst things you can do is take money out early that doesn't fit into one of those exemptions or exclusions. So when it comes to distributions, your distributions are added to your earned income. And so what that means is that if you take $50,000, or let's say you take $100,000 out of your IRA this year, that's equivalent to going out and earning $100,000. So if you just take your after 59 and a half, and you're just taking money out of your IRA, if you're married filing jointly and you take $100,000 of your IRA, just follow right up your marginal tax system, and that's going to put you, it looks like, between these two tax brackets. And so whatever your effective tax is, you're going to have to pay taxes on your IRA as if you earned that money in that year. And if you take that money out early, again, I already mentioned this, there was a 10% penalty on the early withdrawal. So that's pretty much an IRA. Again, just to recap, when it comes to taking the income out, the income that you take out will be taxable if you're older than 59 and a half. If you take that income out before 59 and a half, you're going to pay a penalty, and your income that you're taking out of your IRA will be taxable. Again, unless you follow one of those exclusions. So let's go ahead and take quickly a look at those exclusions, and I'll quickly walk you through them. Now, exclusion number 1 is unreimbursed medical expenses. And so if you have any unreimbursed medical expenses, if you have any health insurance premiums, you can also use money out of your IRA if you have a permanent disability, if there's higher education expenses, if you inherit the IRA, if you're using it to buy or rebuild a home for the first-time buyers. There's another thing called substantially equal periodic payments. If you're going to take your money out for the rest of your life in equal payments, there's a way to get it out. If the IRS levies you, then they can take money out of your IRA for that, or if you're called to active duty. So those are 9 exclusions that if you take your money out for those reasons, you won't have to pay the penalty. You'll still be taxed, but my gut is you don't use your IRA to take money out if you don't have to. Use your savings account for that. Use your investment account for your investment and for your future income. Guys, this is a quick video on IRAs, and specifically a traditional IRA, and how that works for you in your life and the 5 stages that it goes through as you're using it to grow your wealth. So I hope you found value in today's video. Please follow and subscribe to the BrightWealth YouTube channel. If you have any generalized questions, you can leave them in the comments below. We love answering those. If you have any specific questions about an IRA or your IRA for yourself, click the link below to schedule a one-on-one planning session with the Bright Advisor team. They're happy to meet with you. My name's Scott McLaine, and as always, it's not what you make, it's what you do with what you make.